Good afternoon. Welcome to a conversation with Tim Meenan. We appreciate you all spending some time with us on a Tuesday at 4 p.m. It is for those of you that don't know me, my name is Jeff Chernoff. For those of you that do know me, I am still Jeff Chernoff, but I have the privilege of serving as the NAFA Florida president for about 3 more months. I would like to introduce our PAC chair, Mr. Tom Henry, who is joining us from a small town in Tennessee. Tom, the floor is yours.
Thank you, Jeff. I appreciate it. Yep, I'm on the way up to see some leaves in the north, but I didn't want to miss this meeting. And the only thing is, it is called Sips and Tips, but I'm up here in Tennessee where they do a lot of whiskey and stuff. But I promise you, there's no sipping in here as I drive along today, except for maybe some sweet tea. So I do want to thank everybody for joining us this afternoon. And I see we got over 30 folks on the call. That's great. Some of you I don't recognize, so you may not be familiar with the PAC. NAFA's PAC goes way back for literally over a century. The Florida PAC's a half a century, I believe. And, we do good work. So if you don't know about the PAC, please pursue that, because that's only your membership in NAFA is very important. However, it's only part of the importance. The other really significant part is the political side. And you may say, man, I hate politics. I don't want to be involved in politics. Some of you might love politics. You're political animals. That's great. Some of you may not. And if you don't, you just need to understand the old saying that if you're not at the table, then you're on the menu. And you have to work to protect your career, your industry. And one of the best ways to do that is to work to raise some funds to give from your own pocket, funds to the PAC, and that money goes in 2 ways. It supports our lobbyists, who you're going to hear from in a minute, and it also goes to your legislators when NAFA makes a decision which candidate they're going to support. And 100% of the support that we send out in the PAC is based on one simple thing. When you look at what NAFA stands for and who we are in our industry, does that candidate support us? Would they support our platforms, our tenants? Would they support our business? Or would they want to tax and regulate us out of business? And so the PAC is very, very important for that. So one of the ways that we do this good work is with our lobbyist, and I'd like to introduce our lobbyist at this time. It's Tim Meenan. He's actually been to Florida lobbyist since 2004, and I don't know all the other lobbyists that represent the other states, but I've seen Tim work for quite a while, and it's been said all over the nation, NAFA nation, that we've got the best lobbyist right here in Florida. And he lives up in Tallahassee full time. His office is a block off the Capitol. And that's something, by the way, you need to come to Day on the Hill in January and have some barbecue or whatever at his office and see his operation, and come and see your local legislators. But we'll talk about that in a little bit. So without anything further to say, Tim, welcome to our call today.
Thank you, everybody. It's great to be here. I'm coming to you live from Tallahassee, right across the street from Florida's Capitol and next to the Supreme Court. As we get going, I'm going to talk a little bit about some of the things that happened earlier this year, and maybe try to look around the corner a little bit as to what's coming up next session. I do have my chat feature open, so if you have questions as we're moving through, I will try to be mindful of that and try to bring the questions up for everybody and provide answers. It's a great group today, and I'm glad you're all here. Mostly, I'm really excited to see Howard Rosenblatt, who apparently is sitting on a beach somewhere based upon his background there. So with that, let me, in no particular order, most of you know that NAFA National has been fighting for many years against the Department of Labor rule to create a fiduciary standard for life insurance agents. I think we all know that what this means is that it will pretty much prohibit advice to what we call Main Street America life insurance customers if that goes into effect. And NAFA has done a pretty good job so far nationally of stopping that. As part of that effort, NAFA teamed up with the ACLI, the American Council of Life Insurers, and came up with a revised NAIC Act on annuity suitability. It was a very complicated and lengthy set of changes. Please mute your phones. 28 or 29 states have now adopted that, and it was only really drafted and approved probably 2.5 years ago. Florida, we were able to get Jimmy Patronis, the state CFO, to include it in one of his consumer packages that he runs through the legislature. And so the big pushback there is that it creates a state-based best interest standard, not a fiduciary standard. So we are, of course, required, and probably always have been required, to act in the best interest of our clients, taking all things into account. One of the things that did is Florida was the only state where you kind of had this problem when you're selling an annuity. You, of course, whatever annuity insurer's product you're offering, they have a pretty detailed suitability form where you take down all the customer's information, what their income is, what their savings are, so that you can make a judgment about the suitability of a particular recommendation you're going to make. Florida also had a promulgated form here in state government that you had to fill out as well. And so most of you found when you sold an annuity, you had to fill out the same form or similar forms twice. Big pain in the rear. So we were able to eliminate that state of Florida form, and you can just rely now on the form provided by the insurer with whom you're working. So that was helpful. I could probably spend, Tom, an hour just on that bill. There's a lot to it. I will tell you that one of the requirements is if you have not taken an annuity suitability CE course in the past, then there is a new 4-hour one-time course you must take to get up to speed on it. If you have taken that annuity suitability course in the past, then there's a 1-hour course that you are required to take once to kind of get up to speed with all the requirements. And so I think Tom may be looking for options to get that course out there. It's something that I would urge everybody to look at. You know, another bill that kind of came out of left field, but we worked on it, is there's an NAIC Model Act on value-added insurance products or non-insurance products that a agent or a company can provide. And of course, for the most part, you're prohibited under the past law from providing any kind of benefit or incentive that is not listed inside the policy, because they saw that as kind of an unlawful inducement to buy insurance from you. A few years ago, we worked, and our firm took the lead on passing an amendment to that to allow $100 type exception. So if you're not breaking the rules if you take a potential client to lunch and buy them lunch or dinner, or maybe give them some football tickets or something like that. So we got that in. This one is an NAIC Model Act that really kind of greatly expands the list. It's been limited this time only to life and health insurers, and it allows things to be provided by either an agent or an insurer, such as things that might reduce claim costs, things that might enhance health, things that might enhance financial wellness, like financial planning, grief counseling, funeral planning. There's a test where the cost must be reasonable in relation to the premiums or the coverage, and you can't really say you're getting it free, because we all know that by the time it's all done, there's enough money being made in the commission and by the insurer that there's coverage for those other services. So it's a little bit of a gray standard, but it does kind of give some additional flexibility, we think, to agents to go out there and compete, especially in a world where people are starting to think you can just get online and get all your insurance needs met. We like to have flexibility put into your hands. Another bill we didn't really work on, we just kind of watched it kind of with open eyes to make sure nothing weird went in it, but it authorizes paid family leave insurance. It defines it to be coverage for from between 2 to 52 weeks. There's some other requirements in it. It's not mandatory. It is just a line of coverage that could be available to sell to employers to offer as an employee benefit. We watched it closely because we've seen where in some states they have made that kind of coverage mandatory to offer it or make available. And, you know, we don't really like mandatory things like that in the free state of Florida. So we stayed on top of it, and we will make sure that they don't come back in the future and try to do that. But it is something new and different, and we may see one or more insurers step up with that. You know, there's been a long ongoing fight between the health insurance industry and the prescription drug manufacturers. And really on the side of the fence with the health insurance industry are these companies called prescription benefit managers, or PBMs. And they work with the insurer to help lower drug costs. And one of the main ways they do that is that let's say there's a particular drug, let's say high blood pressure. Because every time I talk to Tom Ashley, my blood pressure goes up. So of course I need high blood pressure medicine. You knew, Tom, I was going to get something in there on you at some point. There might be 3 major manufacturers that have similar drugs. They all kind of accomplish the same thing. So the PBMs will go to all 3 of them and find out which one will give the highest rebate if they're made the primary formulary and offer. And it could be offered maybe with either a very low deductible or no deductible at all. The other 2 would still be available, but at a much higher price. And of course, those rebates get passed on to the insurance company, which in turn is by law mandated to pass them on to the insurance company. And the insurance company has to file those rates, and it would reflect either a slow of the increase in the rate or a reduction in rate as a result of it. So it's a good thing. But of course, the 2 that are out in my example don't like being out, don't like having to give reductions on their drug price. And so they get together and say, aha, drug prices aren't really our fault. Don't look at us. Look at those PBMs. They're the middleman. They have a black box. They're raising prices. You don't know what they're doing. So they came up with a very big increase in regulation on these PBMs. I can tell you that at the end of the day, it's going to require significant licensure and other hoops that they have to jump through. By the way, the health insurance industry is not afraid of that regulation. We're highly regulated already. But it really is just a deflection. And we anticipate seeing more deflections. Another big thing they try to pass, and we stop, is to eliminate what we call drug formularies, where maybe there's a particular malady and there's a course of treatment that involves a drug that is very inexpensive, and it helps 70% of the customers that take it from a clinical perspective. But then there's another drug that's $40,000 for one round, like a Hep C type cure. But it's $40,000 for one course of treatment. And they would like the opportunity for doctors to just jump to whatever drug they want and just pass that through to health insurers. And of course, we all know in a lot of ways, we could say we don't care, except that I'm looking at a screen full of people here who have to go tell the employers how much their rates are going up every year because of these kinds of things. So that bill went through. You'll anticipate hearing more from us. Howard, I do see from Howard, he's asking me to explain the difference between best interest and fiduciary standards. And Howard, as a lawyer, probably could do a better job than me. But as a fiduciary, it would be a very easy charge to level, that because we are paid commissions by the insurance company in selling a life insurance product, that our loyalty may not completely lie with the consumer. And as a fiduciary, there's a lot of case law on the idea that if you act as a fiduciary, you have complete and unfettered duty of loyalty just to that one person. And most agents I know are comfortable getting paid a commission and finding the best product based upon a particular consumer's viewpoint. So hopefully, Howard, that helped out a little bit. And we'll keep moving on through it here. So that's PBM regulation. I will tell you, I'm not going to go through them all. There was probably 15 other bills that have mandated health services. that add to things that must be covered, all of which died. And I'd like to credit my law partner, Joy Ryan, is on this call with us. And Joy, you know, I always tell her she has the worst job in the Capitol because she has to get up at these committees and say, you know, with respect, nobody's against what you're trying to do. What we are against is, again, every time you raise the cost of health insurance, I hear in the distance a small employer saying I can no longer afford to offer it. And so it's important to keep those kind of additional medical mandates out. And she did a fantastic job helping us do that this year. Little things come through. This takes a sentence, but basically telehealth is really gaining traction, just like this Zoom call. It saves money for health insurers. It's convenient to consumers to be able to get on and have a telehealth visit with your doctor, as opposed to getting in your car, driving across town, taking an hour to get there, an hour to get back. But there are folks, a lot of seniors, for example, that may not have a computer or don't know how to use their smartphone. Much like George Royal, he holds his upside down every time I see him. I don't understand why. So this bill allowed telehealth to happen on audio only calls. And you wouldn't think you'd have to fight for that, but you have to fight for every little thing to kind of make it a little bit more reasonable. Another thing you may come across, and again, we did not weigh in on this. Frankly, I view it as sort of part of the culture wars that you're starting to see in state legislatures and certainly here in Florida. But a bill has been passed that allows providers, meaning medical doctors, for example, or payers, which could be health insurers, to opt out of participating or paying or as a doctor providing the service on a particular medical treatment based on objections of conscience. You can probably understand what the main thrust of that might be. Lots of bills flying through on abortion, lots of bills flying through on gender dysphoria and those kinds of issues. So I just thought you should know that that bill was passed. You could get a call from one of your insureds if something like that were to happen. My gut's telling me the major health plans aren't going to, go down that road. It's a road fraught with peril. But I could certainly see these medical cost sharing plans that you see that are not insurance by any stretch of the imagination, and they're highly unregulated. You could probably see them doing that. A lot of them are sponsored by churches and whatnot. A bill we've killed 2 years in a row. I call it, you got to draw a line somewhere, kind of a bill. It would just say that agricultural co-ops or any nonprofit could offer health care coverage to their members without having to become licensed as a health insurer, without having to use licensed health insurance agents, without having your forms approved, your rates approved, without having solvency applied to you. I mean, it's kind of madness in a lot of ways. And so, we stand against that kind of thing, because what happens is one of those gets going. Of course, they sell a lot of it because they won't price it right. It'll underprice an actuarially sound rate. And then when consumers get hurt, somehow the legislature thinks they got to do something to health insurers and health agents. They kind of come after the wrong party in those examples when they're the ones that open the door. So we were able to stop that bill, and will continue to stand against that bill in the future. So no talk would be complete without, reminding you that you live on a peninsula, 3 sides surrounded by water, and that we may have a little bit of a homeowners insurance crisis here in Florida. And I say that tongue in cheek because having done this for 30 years, and we've seen some bad cycles. I really think, Glenn Ritchie, this is the worst cycle, that I have seen in terms of just sheer volume of rate increases and problems. And it all, a huge part of it boiled down to the fact that you look at National Association of Insurance Commissioners data that track all 50 states, and they found that 2 years ago, Florida accounted for about 8% of the residential property claims out of all 50 United States, which seems about right. But they accounted for almost 78% of the litigated claims. So 22% of the America's litigation occurred in 49 other states. And here, hundreds of thousands of lawsuits are filed because of this thing called the one-way attorney's fee. That's the thing where, as you know, you can sue your insurer, and if you get a penny more than they offered, the consumer gets the penny, and the plaintiff's lawyer, gets a $30,000 legal fee. And so what you saw is what I call manufactured lawsuit factories, where small law firms were filing thousands and thousands of lawsuits, all for small dollar amounts, in the name of hopefully settling or even litigating and getting big fees. And to compound it, we had a Supreme Court that just before the court sort of shifted ideology to a more pro-business ideology, we had a Florida Supreme Court that sort of as their last parting shot of what I would call the less business-friendly court, changed a rule that for decades, and still the rule in federal courts, that says, hey, if there's a rare and exceptional or rare and unusual case that the average lawyer might not take, and had someone not put their time and effort into it and won, maybe justice wouldn't have been served. In those cases, think about maybe a pollution, and kids getting cancer in a neighborhood because a chemical company dumped chemicals, and it took 7 years to try the case and get justice. That attorney ought to get more than just their attorney's fee. They ought to get a multiplier. They ought to get 3 or 4 times what they would normally charge to incentivize justice. I support that. I want justice in hard cases, and I want lawyers to take difficult cases. But the court said that rare and exceptional is out the window. You can just, judges apply attorney's fee multipliers. So standard water main breaks, kitchen fires, leaks, roof claims, it wasn't 30,000 they were getting 100, 150, 200,000 in attorney's fees for a win. And I would leave it at this. It's an impossible standard. If you've ever remodeled your kitchen, you get 3 quotes. And of course, all 3 quotes come in at exactly the same price, right? No, they don't come in even close. And you're saying, we want this granite, this color paint, this tile, this carpet, this sink, and they're still wildly varying, right? So it's an impossible standard to win by 100 cents in all cases. So there have been 3 or 4 bills starting last fall. The biggest one was in Christmas. It was Senate Bill 2A, and it about the mid-December, it eliminated the one-way attorney's fees for property insurance. The legislature came back in regular session and eliminated the one-way attorney's fees for all other lines of insurance. There was a fear that the virus, as I might call it, would spread from property insurance to health or others if they kept the one-way attorney's fee in. And by the way, almost no other state has the one-way attorney's fee. That ought to remove the flame from the fire. The regular session, they also reinstated the rare and exceptional standard for attorney's fee multipliers. So that was a good move. The issue here is timing. The Commissioner of Insurance today presented before the Senate Banking Insurance Committee and showed that the industry for 5 years has had substantially growing negative underwriting losses every year, meaning they're losing substantial amounts of money for 5 years. So we have a weakened industry. We, of course, had over 10 companies go through the guarantee fund. Those claims are costed $1 billion and are still working their way through. But if you were sitting there on December 16th when they got rid of the one-way attorney's fee, but you had a Hurricane Ian claim, it was probably unfair to say we're going to snatch away the one-way attorney's fee for a claim that had already happened. So what has to happen is from about December 16th of last year through December 16th of this year, policies have to renew after the effective date of that bill. And then it's going to apply to a claim that occurs on that renewed policy. So it's really future claims, some of which are starting to come in. They're starting to come in at a lower rate, oddly enough, because there's no incentive to just file all these frivolous lawsuits. Only the real lawsuits will get in. And when you talk to the bigger trial lawyers, they'll tell you they somehow survived in the other 49 states without a one-way attorney's fee. We did not eliminate the opportunity for consumers to sue their insurers if they want to. So another bill that passed at the end of session, and this is Tim Meenan's take, but the bill wasn't even filed or around, and it popped up 2 weeks before the end of session, roughly within 48 hours after a guy from Palm Beach County with a notorious account on a Truth Social platform with orange hair tweeted out that Ron DeSantis is, giving away at the expense of consumers too much to the insurance industry. So this bill came out, was drafted. We had some input, and it went to the governor in a very short period of time. And it was called an act relating to insurer recriminations. No, I mean an act relating to insurer accountability. It's a little joke there, my friends. And it's got literally 20 pages of powers granted to the Office of Insurance Regulation, including substantially increasing, fines that might have been $20,000 can now be $1 million against insurers that act improperly, outlining all kinds of standards for triggering exams or activity by the commissioner when he sees wrongdoing, and actually requiring a quarterly report to the legislature of all fines and penalties issued by the department. So I would ask you, do you think it's going to be a thing where the commissioner is going to regularly turn in a report without a lot of fines against the insurance industry? And I would say he's got to fine the insurance industry. That's kind of the whole point of the bill. So expect to start seeing things that maybe were wrist slaps in the past getting, substantial fines and penalties added to it. I will say there's some good solvency stuff in there. We all know that the companies that have gone under, the most recently UPC, which is about $500 million in claims liabilities itself alone, that the guarantee fund is paying, is not a good thing. And so, I think the idea that there would be some more teeth to the regulators, not necessarily a bad thing. My fear at the end of the day for property is rates have gone up over these past 5 years, substantial amounts. I don't have to tell anybody. You all talk to these consumers, or you are one. And 5 years ago, the average insurance premium was $1,500, and the average insurance premium, again, this is across all value houses, now is $4,000 and something, maybe pushing $5,000. It's just not sustainable. There are people that were paying $3,000 that are now being asked to pay $12,000 a year. If you're on a fixed income, that's very difficult, if not impossible, to deal with. So what's happened is that there's this attitude, hey, we gave you this one-way attorney's fee. How come rates haven't, come down immediately? Well, I walk you through what has to happen before it even takes effect. And actuarial science doesn't look ahead and predict the future. Actuarial science says, based upon this past 12 months or these past 24 months, losses have decreased. So therefore, we will lower rates. The other problem we have is that the reinsurance market worldwide is in a free fall a little bit. Typical year of 50 trillion in losses internationally, they're triple that. So if you pick up the newspapers, you'll see the big insurers aren't just reducing writings in Florida. They're reducing writings in New York and California and Colorado and all over the country. And a lot of it has to do with these reinsurance costs, and we're not immune to it. But at the end of the day, if they will give us the time, if they'll get us through 2024, I do believe in 2025, not just a leveling, but I'm hopeful we'll start to see some, I call it competition breaking out. Once one or two insurers start lowering the rates, funny what the other insurers will start doing to not lose customers. So we saw it. We saw it after the 2008 and 9 period of time where Charlie Crist put in a bunch of reforms that caused dramatic payouts that were raising insurance rates. As soon as they rewound them, these companies over 4 or 5 years, every year lowered rates, and no legislator had to tell them to do it. So hopefully they'll hang in there. They won't try to unwind what's been done. And that's what we're hopeful for. I wanted to just say that this every other year. So our Florida Constitution says that in odd numbered years, the legislature shall meet starting on the first Tuesday of March for a 9-week session. And when that was passed, the idea was they only had to meet every other year. Doesn't say what date they need to meet on the even years. And so the legislature on even years has kind of now institutionalized starting the session in January. And so it's really the second week in January, and then it goes from there, and for 9 weeks. So really what's happening is, if you back up, they're in town this week to install the new Senate president, Ben Albritton, who actually has an insurance agent's license. He's more of a farmer, but he does understand insurance and was in the insurance business at one time. So the committee meetings are off to the races. The attitude that I keep hearing is, that the legislature is a little bit insuranced out, meaning, tort reform, insurance reform, they've dealt with it. I feel like based on the leadership in there, you won't see any big unwinding of the reforms in property during the 2024 session, but there's new leadership coming in the 2025, 26 session. And I think there's an opportunity that if we don't show some benefit in reduction of rates, then we're going to have a fight on our hands. So we're up there meeting. We're being told bills can pass. We can deal with insurance issues, but we really don't have an appetite for major chunks of anything, meaning more major reform in the property market kind of a thing. So it's a little early to tell what it'll be. I know that the Senate president, and Mark Tirolosi, you asked this question the other day on the call. What you heard Linda Stewart say was that the Senate president has an interest in health care issues. That's a little different than health insurance sometimes, depends on what it is. Her mode is, there's a tremendous nursing shortage. There's lots of shortages of doctors in certain areas, especially rural areas. What can the Florida legislature do to kind of help get more professionals in these places to help more people, especially as Florida becomes this magnet for aging people, and has a higher age population with more health needs. So there's going to be a focus on those issues. Sometimes there's a nexus where it jumps across and they start trying to do something to health insurance. Terry Seafelt, and of course you will be watching it with me to make sure nothing bad happens there. So I've kind of gone stream of consciousness here for 30 minutes. There's some other bills I can talk about, or Tom, I'm happy to kind of open the floor, because I know many of the people on this call don't know how to type in the chat feature. Jeff Chernoff knows where it is, but Tom, but Pat Garabrandt wouldn't know how to find the chat feature if it was, if I could give him $1,000 incentive. So let me stop here and see if there's anybody that wants to throw anything out for the good of the order or questions.
You mean Pat Garabrandt, our former chair?
Yeah, I think that's him. Yeah, does anybody have any questions for Tim? Well,
there is
another.
Well, let me throw one more thing out then, because I didn't want to forget this. So the legislative committee dealt with an issue relating to life insurance pre-licensure hours. And if you look at a map of the United States, well, let me back up. So, but before Gramm-Leach-Bliley passed, 20 years ago, Taylor, or a little more than that, if you were a Michigan insurance agent and you wanted to come down to Florida in the winter and open an office across the street from Taylor Collins and compete with her, we had it situated that you would have to, do the pre-licensing hours, take the test, apply, and get licensed. We like that because apparently nobody in Florida wants to go spend their winters or summers in Michigan, but everybody in America wants to come to Florida for the winter. But then Gramm-Leach-Bliley did away with that and mandated and forced the NAIC to kind of come up with, when you're licensed in your home state, you can sort of automatically get into the other states with just some very brief paperwork and certainly no pre-licensure hours. So with that backdrop, our reason for supporting higher hours, in addition to the idea that we want to maintain a strong profession, is being looked at. Half the United States have 0. Most of the other half of the United States have 20 for a life agent license, 20 hours. Florida had 40, and then and Florida was one of 4 states, so there were 3 other states. Colorado, I think, had 50, California and New York. And whenever you're lumping us in with California and New York, I just get a little twitchy for a lot of reasons. But bottom line is the legislative committee decided to kind of compromise with the ACLI on a one-time basis only and allow a 30-hour pre-licensing for a life-only agent's license. The message to me was, this is a one-time deal. If they bring it up again, we're not interested in eroding it any further. You don't want hairdressers having more training, than someone who's handling your life savings and your retirements. So wanted to let you know that that deal was struck and that bill went through. In addition, there are laws on the books to allow smaller life insurance type policies to be used for pre-need. That has been in the statute for, gosh, Tom, I guess, I'm trying to think of some of the lobbyists ahead of Herb that, worked on kind of keeping a collar on that. It does allow funeral directors to sell it in that context only. They can't compete against us. Obviously, it would be a great time to sell life insurance when someone is, in there picking out a casket and saying, hey, wouldn't you like to buy a $2 million policy for your kids or something like that? So we've prevented that. The funeral industry asked if they could have a limited lines license. So the way to think of a limited lines license is you still get fingerprinted, you still apply for it, but you don't have to, take the test and all of that, because their product is very small. It's like 20-something thousand. It just covers the cost of the funeral. And there's lots of examples. Crop hail insurance. If you hire a mover and they insure, that agent is selling you a policy to cover your contents in the moving truck, which are absolutely going to get broken. I can tell you that right now. If you're getting liability insurance at a car rental counter, they can only sell you liability covering that rental car. So it's one of those type licenses, and the legislative committee felt like that wasn't giving away the farm. And there's still something to revoke if they do something bad, which is really what you want, is you want to be able to, take that away and stop them from selling any life if they lie, cheat, or steal. So those are 2 other little enhancements that I would bring to your attention.
Thank you, Tim. So Pat asked, what's it like for those, could you describe for those that aren't here, haven't been to a day on the Hill, what's it really like? And, to go up there as a constituent, a NAFA, an industry member, and what are you going to do? What's that day like?
Yeah, if you haven't been, you will. It really opens your eyes, not just as an agent, but sort of as an American, right? Because it's a messy process, and basically you have 160 people, 40 in the Senate, 120 in the House. You get a chance to meet with them. You may be talking to a farmer. You may be talking to a guy that owns a garbage business. You may be talking to an insurance agent. That all elected officials. And most of them have no idea about even the basics of our products, because they have to pass legislation on everything: education, transportation, healthcare. And
Okay.
you get a chance to see
you.
that up close and personal. You get a chance to meet with them. You get a chance to hear from them. We're going to actually do something a little different and have a bunch of the key legislators come by and talk to us as a group. But you'll also have the opportunity to go in, and you go in as a group. So you're not sending you in there alone. You'll go in with some seasoned people, and we pick 2 or 3 issues, usually 1 from each line: health, life, P&C, and try to advocate for our issues. But when you're here, you might sit in a committee hearing. You might see me testify. You might see an amendment get handwritten at the front of the committee meeting and go on a bill that totally messes with our business, and you realize how tenuous it is. I can tell you the last week of session, twice in the last decade, there was an amendment on the House floor to allow car dealers to roll the price of their auto insurance into the retail cost of the auto and advertise, buy a car here and you get your insurance free for 3 years, 5 years, whatever it is. Obviously, there's no shopping around. Obviously, the car price is inflated to cover that. Obviously, there's no advice on, well, what should your limits be, any of that stuff. And that's last week of session. We're 3 days from the end of it. And had we not been standing there fighting, that would be the law. And I can tell you, that would take it. There's 20 million cars sold in America each year. That would take a pretty big chunk out of all the auto insurance agents' pockets. But I could go into other things we've done, but it's a great thing to watch, a great thing to see the sausage being made. You become a better American, and you probably will get even more involved.
And while you were talking a little,
I agree with you.
We got an email here that the hotel rate is $129 a night for Day on the Hill, unheard of, at Hilton Garden Inn and Hampton Inn. Registration is now open. We just opened registration about 10 minutes ago, so you're the first to know. So pop in there and do that. It's so important to come to Legislative Day on the Hill. Tim does a great job with the orientation, with the talking points, gets us ready and squared away for all of our visits the next day. You'll need to coordinate with your teams in your local area to set up those appointments with those legislators. Not to mention the wonderful open bar and buffet dinner we provide for you after the orientation. Right there in Tim's office is courtyard there. So that's one of our favorite parts. If you've never been, it's awesome. It's terrific. It's often regarded as our most popular event. So please make plans to come to Legislative Day on the Hill, January 22 and 23. January 22 and 23 registration is open. Bring a sweater. So you'll enjoy that.
Yeah. Thank you,
Two quick
Tom. I
things.
appreciate
So
that.
Taylor wrote in the comments, when you have to help an 85-year-old undo the mess of a Chicago non-resident agent who came in and randomly called him on the phone and sold a plan that didn't have the local public hospital on the network, it's unconscionable. Keep the hours high. I think your sentiment is dead on there. And as an added benefit for dialing in and being the good agents in the group today, the good bourbon, when you come to Day on the Hill, is back in Tim Meenan's office. We don't spread that around to anyone that's not on this call. That's just for those of you that are here. So,
Well, actually,
that's
just
a
for
risk
those who are
offering it
gonna
to
get
George
it.
Royal. I can tell you that. He'll probably drink me out of house and home.
He's not kidding, by the way.
No,
I'll
he's
bring
not.
Angels
In fact,
Envy.
yeah, there you go. Let me say this. Actually, that premium bourbon is only for those who pledge to give something today. So with that said, let me see if I can get in the chat space here. Will any of my colleagues be willing to match me today on a $500 pledge? So let me see what you got. Somebody coming here with $500 on the pledge. And in the chat space is the hyperlink you can click on to give. And of course, I always want to remind you, talk to your broker dealer about giving to the PAC, getting permission to do so, and how much you can give. Some many broker dealers have various limitations on the general PAC versus specific candidates.
Thank you, Taylor.
Taylor Collins, is that for real? Taylor Collins has matched me on 500 today. Thank you so much, Taylor. Let's see if we can keep that going. Let me just say, our goal for the state this year is 150,000. Taylor did a great job raising about $120 last year. It was awesome. We actually beat the goal she did with her great work last year. And we had a hugely ambitious goal this year to raise 150. We're right at 94,000 in about 9.5 months in. So we got to really make this fourth quarter come through pretty big. So let me just encourage all my colleagues out here to give some money, and let's do it today. So we've got $1,000 already raised today. Anybody else out there willing to participate? I see you've got 27 folks. Let's do it. Come on, somebody else.
Tom, will
Else
this
step in.
apply to VIP as well as PAC, or only PAC?
I'm sorry.
PAC, just PAC.
Just PAC.
Okay,
Yeah,
so
this
VIP
is just
won't
for
count.
PAC.
Thank you.
No, just for PAC. Thank you.
Well, if I could lower the number, I'll throw $100 in. Am I jumping ahead of you, Tom? Did I just screw it up?
No, that's really good. I was going to go there next. In fact, I was going to ask you if you've given your PAC contribution yet this year.
I don't know.
So you got $100 in. All right.
Yeah.
I'm going to have to look on the list and find out. and see you
I have
before
a feeling
January.
if I haven't, I'll be getting a call in the next 3 minutes.
That's right. All right. Anybody else? How about $100? Let's match Mr. Meenan, our own lobbyist, giving
Give
back to the PAC.
101. Give 101 and feel good about kicking my ass. That'd be good.
Yeah, there you go.
I already did it 500, so I'm feeling pretty.
Yeah, you're good. Yeah. you're
I
right.
get the good bourbon.
Yeah, yes, you do. All right. Well, if there's nothing else, Mr. Ashley, do you have anything else to add today?
No, sir, that's awesome. You know, we just appreciate what you do, Tim, as our lobbyist. You've been our
Yes, we
lobbyist
do.
since 1990, since 2004. So coming up on 20 years as NAFA Florida lobbyist. We couldn't ask for a better one, and we appreciate all you do. Mr. President, Jeff Chernoff, I'll turn it over to you.
Thank you very much. Thank you all for spending some time with us today. For those that are interested, on December 12th at 4 p.m., we will have our awards ceremony as well as the swearing in of our 2024 Board of Directors. We recently concluded our elections, so stay tuned for that as far as additional information. If you have not given to the PAC, there are chat messages in there, and I appreciate Taylor and Mr. Meenan for making their contributions today. I would be remiss if I didn't recognize our NAFA president is on today's call, Mr. Brian Holtz. And we're very excited for all that he's done this year. If you are interested, the National Leadership Conference current registration is currently open from December 3rd through 5th. Our very own Tom Cothran will be sworn in as NAFA National President. So Florida will have 2 presidents from the state of Florida back to back. So if you are interested, please consider registering for that as well. I thank you all very much and have a great rest of the week.
Thank you, folks.
Thank you.